Hey everyone, today we're going to talk to Chris Perkins. I just met him I don't know today, but I just linked up with him in the LinkedIn, and he had an interesting tagline from real estate to cash flow from stock. I'm like, cash flow from stock, what is that? So I had to ask him, and he's like, hey, let's talk. So here we were talking. I said, oh, this seems like a good information. So I wanted to share this with everybody and let him share it to everybody. That way, hey, whenever it's for them, if it's for them, they can go talk to Chris and see if they would want to invest. And maybe not now, maybe in the future, whatever, right? Get the conversation started. So, Chris, kind of explain your background bio, because obviously, since we just talked, I know a little bit, but there's a lot more to it. Kind of,
Yep.
go from your history to what you're doing now.
Yeah, for sure. Thanks. First of all, thanks for having me, Raju. It's a pleasure to be here. And thanks to all your fans for watching this. So basically, I started in the restaurant business when I was 21 years old. And I kind of got into the real estate by accident because when I was buying the restaurant, they wanted to lease the building to me. And interest rates were very low at the time. And my dad was like, why don't we just check out buying the building, see how much it would be?
Mhm.
And they wanted to charge 5,500 a month for us to rent the building from them, and it would only be a 5-year lease agreement. So after 5 years, they maybe raise the rent on us, right? Who
Right.
knows?
Mhm.
And so we went and checked out, and it was only going to be $3,200 a year, or sorry, $3,200 a month to buy the building with zero down.
Right. Damn.
So we still had to put money down on the equipment,
Mhm.
and it still cost some money. I was able to save up $15,000 from just working multiple jobs as a kid. So I
Mhm.
was able to save up $15,000, and then my dad helped me out with another $15,000 to get everything up and running and get food in the building.
Wow. Okay.
So as a 21-year-old kid, I spent 15 grand on disposable things or perishable food items, hoping they'd sell in a couple of weeks. So, you don't have, you have a limited number of time. It's not like t-shirts, right?
Right.
Yeah.
Wow. Okay. And
Yeah.
how did it go? Okay, go ahead. Sorry, finish.
Yeah, no problem, no problem. So yeah, from there, I mean, I didn't even have any money for advertising, right?
Mhm.
So I didn't have a sign on the building or anything. And my dad's like, "How are you going to get people to go into that building? Like, why are they going to go in there?" So I was like, "I don't know, I'll figure it out." And I drove around to about 200 different businesses in the town that I was from, and just gave them a takeout menu and said, "Hey, this is who I am. This is what I'm doing. We're opening this date here,
Mhm.
right?"
Mhm.
And the first day, we did about $1,200 in sales. And
Mhm.
then the first day was a Thursday, December 2nd, 2004. Then the
Mhm.
next day was a Friday. And the next day it was packed, lined up out the door.
Wow.
And we were completely overwhelmed.
Mm.
So when I took over this restaurant, there was 3 staff. And I hired 5 more staff. And the old owner said, "You are crazy. You're going to go broke in a couple of weeks." So this, to back up a little bit, this business was only doing about $400 a day in sales
Okay, wow.
when I took it over. And like in the restaurant business, that's not enough money to turn the lights on, right?
No.
So, he just kind of thought I was nuts. Like, how am I going to get people in there, right? But I rebranded the menu. I didn't have any money to do renos or anything, so it was like a Greek feel in the restaurant, but it was a steakhouse. So eventually, we did renovate, but it took a while to save up enough money to renovate the restaurant, right?
Mhm.
Eventually, we renovated and looked like a steakhouse afterwards. But that's kind of just the way that things rolled. So the first month we did $90,000 in sales,
Wow.
when previously they're looking at doing like 10,000 a month in sales.
Wow. Okay. Oh, that's a huge.
So it's a huge upswing, uptick in the business, right? So I ran that for 5 years, and I was getting to the point where I was still working 6 days a week, but I was really only working around the busiest times of the restaurant. So I still had to be in town all the time, but I wasn't in high demand. Like, I didn't need to be in the business all the time, right?
Mhm.
So then I decided to buy the building across the street, which was a breakfast restaurant. So I
Mhm.
bought that and kind of did the same thing with it. It was being mismanaged, and just I didn't rebrand it. It was the same restaurant, but like redid all the structure of how they had the schedule, how they had too many people on all the time, things like that. Just kind of revamped how it was run.
Mhm.
And then I ran that for a year, sold the business,
Mhm.
and kept the land and building.
Mhm.
So then I rented the land and building to the new owners of the business.
Mhm.
So then I thought, that's a really good idea. Let's do that again. So then
Uh-huh.
I turned around and put the other restaurant up for sale,
Mm-hmm.
sold it, and then kept the land and building, signed a 10-year lease agreement with those guys. So then I had 10 years of just, living off of cash flow from the restaurants without having to be in the restaurants working at them every day.
Uh-huh.
And then I went traveling.
Oh, wow.
So I went traveling for about 6 years in total.
Wow.
And I would never take those years back. They were amazing, but there was a counter side that I lost touch with society, kind of, right? Like I wasn't working, so I lost touch with progress of everything. I just
Right.
completely checked out, and I was just traveling around, not learning anything. So I kind of stunted myself a little bit in the learning curve there, right?
Uh-huh.
Does that make sense?
Yeah, yeah,
Yeah,
yeah.
yeah.
And this is fascinating. Okay, yeah, go ahead, please.
Yeah, so then, I was like, okay, I gotta get back into like making some money. I don't want to have like a job where I'm tied down. I want to be able to earn my money online digitally, right?
Uh-huh.
So when COVID came around, there was a whole bunch of problems with real estate because all these restaurants had to close, nobody can pay rent.
Mm-hmm.
And then all of a sudden, now I'm collecting only 75% of the rent that I was able to collect
Wow. Okay. Yeah.
before.
Uh-huh.
So it's like, and then people are late paying because like they don't have the cash flow that they used to have, right?
Right.
So it ate up a lot of my cash reserves and things, and I was like, I gotta find a better way than real estate. Like this is not good.
Mm-hmm.
And so I started looking at stocks and just got like very deep into stocks, started simulating trading and just looking at all sorts of data and
Mm-hmm.
just really narrowing things down over the past 5 years. So just to give you a bit of a timeline, I had sold the last restaurant in 2012, so 12 years ago.
Oh, okay.
Yep. So
Uh-huh.
12 years ago. So I traveled for 6 years, and then I've been living in Saskatoon, Saskatchewan for the last 6 years.
Gotcha. Okay.
Yep.
Okay.
So then over the last 6 years, I just kind of did a huge, process of elimination of where do I want to put my money,
Mm.
right?
Mm-hmm.
And narrowed it down to the strategy that I'm now using in abundance asset management,
Mm.
which we kind of discussed earlier. You can ask me some questions about that.
Mm.
One thing that I pride myself on with abundance asset management is our level of transparency. Most
Gotcha.
hedge funds, they don't tell you nothing. They're just like, here's our historical returns. We need $3 million as a minimum investment. You should trust us because we said so.
Mm-hmm.
Are you putting your money in or not?
Gotcha. Yeah.
And we just wanted to do something a little bit different where we put every angle of risk on our side, and we
Mm-hmm.
wanted to do that for other people. And it's like I wanted to come up with an investment vehicle that I'm comfortable putting my entire net worth in. And
Mm-hmm.
if I'm comfortable putting my entire net worth into it, then other people will eventually follow. It might take some time, but that's all we're kind of asking is like, hey, just check us out,
Mm-hmm.
see what we're all about, follow our returns. I post them on LinkedIn,
Mm-hmm.
and you can see without committing, if it makes sense.
Gotcha. Awesome. So let's
Yep.
get into that, right? I know we talked about it, but that's between us. So for the
Yep.
wider audience, let's walk through the methodology you're using and what you're investing in. So kind of let's give the
Yep.
overview, and then I guess, obviously get into some more questions, and then we can go a little bit more deeper dive
Yep.
as we
As
get
needed.
to it. Yeah.
Yep. 100%. So it's like a process of elimination, right?
Mhm.
So 90% of professional portfolio managers underperform the S&P 500.
Mhm.
So the 10% that do outperform the S&P 500 usually have a high minimum amount
Mhm.
that you can put in there. They're completely inaccessible to the kind of the average person, right? You have to have a massively high net worth.
Mhm.
And so, basically you have a very slim chance of outperforming the S&P 500. So, as a rule, if you don't want to learn anything about investing, just
Mhm.
put your money in the S&P 500 and
Mhm.
you can rest easy, like you're going to outperform 90% of other people in the
Right.
world.
Right.
So, if you're not happy with that, then I don't know what to do for you.
Right.
You know?
Exactly.
But but there is this other little ETF, little I say, but I think they have about $6 billion in assets under management.
Mhm.
But they're the second most liquid asset on the planet, and it's the QQQ. It's an ETF that tracks the Nasdaq 100,
Mhm.
and it has outperformed the S&P 500.
Mm.
over the past 15 years for sure, maybe even 20,
Mm-hmm.
but definitely over the past 15 years.
Mm-hmm.
So I'm like, okay, why is it outperforming the S&P 500? Because it only has 100 companies in it.
Mm-hmm.
Number one reason. Number two is it's heavily based in technology.
Mm.
So I think we can both agree that, especially over the last 5 years, technology has ramped up in our lives, in our everyday lives.
Mm-hmm.
And people are paying $1 for iCloud storage a month, or $3 or whatever it is, but they have hundreds of millions of customers doing that.
Right.
Right. And same with Google, you're paying for cloud storage on Google. There's all of these things that they're just picking up nickels and dimes, but they're picking them up from millions of people at a time.
Right.
So I believe that technology will continue to innovate. It'll continue to be more useful in people's lives, and more people are coming on board with technology. You even see, grandmas and grandpas using it now because it's become so user friendly.
Mm-hmm.
Right? Where it never used to be. It used to have to be kind of a genius to use it when I was a kid, right?
Right.
And then, so, number one thing is you got to believe in the underlying asset that you're going to buy,
Mm-hmm.
because the price is going to go down, and
Mm-hmm.
you can't freak out when it goes down.
Mm-hmm.
It's got to be, you got to program your emotions
Mm-hmm.
to be like, hey, it's down 3% today. We should buy some,
Right.
right?
Mm-hmm.
And most people enter the stock market and all they hope for is that stock goes up.
Right.
And it doesn't matter what you hope for, but
Mm-hmm.
it's a mental program, right?
Right.
So if you're hoping that this happens,
Mm-hmm.
the counter side of that is when it goes down, you're going to be not so happy,
Right.
right? And so that's why it's still important to keep some cash on the sidelines, right?
Mm-hmm.
Not commit all of your cash to one asset all at once.
Mm-hmm.
So one of my mentors told me, he's like, I buy stocks that I love. I buy stocks companies that I love, and I hope that the price goes down next month.
Mm-hmm.
Right?
Mm-hmm.
So I'm going to get a small position, and if the price goes down next month, I'm going to buy more.
Mm-hmm.
So he kind of described it to me like, if you're going to the grocery store to buy groceries,
Mm-hmm.
are you hoping the price of bacon is higher than it was last week?
Right.
Not really.
Hoping
I
that.
mean, if you are, that's kind of weird, but
Right.
look, buy stocks like you're buying groceries,
Mm-hmm.
right? And we kind of took a bit of a different approach with our strategy in abundance asset management. I don't know how deep you want to get into the option strategy, so I'll leave that up to you.
No, let's go. Let's get a little bit into it. Obviously,
Yeah.
for the sake of people getting the gist of the information, I guess we won't get into too much details. They can contact you, obviously, if they want to get more
Yeah.
details and obviously do business or maybe think of doing business, right?
Yeah.
So yeah, let's get into a little bit highlight level.
Yeah.
If I have questions, I'll ask, I guess. Yeah, sure.
Yeah, 100%.
Mhm.
So basically, let's say that, today, Raju, you want to invest $50,000 in abundance asset management. So we take your $50,000 and immediately we put it into a SNOX account, which is like a government bond, right?
Mhm.
So we're immediately going to start making interest for you on that money. Right now, interest rates are high, so that's good for us. We're getting about 5% on that. It fluctuates, but we get about 5% on that. So that's
Mhm.
kind of a baseline that we're already getting immediately.
Mhm.
Then we can multitask with that cash and
Mhm.
use it to sell put options.
Mhm. Mhm.
So we use that to sell put options.
Mhm.
When we sell a put option, for those that don't know too much about options, we get paid upfront
Mhm.
cash to promise to buy shares of the QQQ if they drop in price at a later date.
Mhm.
Okay. That's kind of the nuts and the bolts of it. If the stock doesn't drop,
Mhm.
our option will become profitable,
Mhm.
and we repeat the process. Sell
Mhm.
another put option, wait. If it
Mhm.
expires worthless, then we just do it again. If
Mhm.
the stock price drops, now we're buying the shares. So we take the money out of the stocks, we sell the bond,
Mhm.
and we use that cash to buy the shares of the QQQ.
Mhm.
So then once we own the shares of the QQQ, I kind of look at it like, okay, now we own the asset.
Mhm.
It's a house. It doesn't matter what it is, right?
Mhm.
If you own a house, you want to rent it out,
Mhm.
generate some cash flow. So if I own the shares, if I'm happy to sell them at a higher price than what I paid for them, I
Mhm.
can get paid to sell a call option.
Mhm.
So then I sell a call option at a price that I'm happy to sell the shares at. So
Mhm.
think of it like a fixed price order, right? So for those that aren't like watching your stocks every day, or you don't want to pay attention to the screen, it's like, okay, I'm happy if the stock goes to $500, I'm happy to sell it.
Mhm.
So you can place a fixed price order that if it goes up to 500, it'll get sold and away, Bob's your uncle. What
Mhm.
we do is say, okay, in 30 days, if the stock is worth $500, we're
Mhm.
happy to sell it. But we do that using a call option. So we get paid to say that.
Mm.
We're almost like making our own dividend out of the stock.
Mm. Okay.
And so if the stock rises that high,
Mhm.
sure, we'll sell it.
Mhm.
And then we'll get cash back. The cash goes back into stocks.
Okay.
We start selling a put option now,
Mm. Yeah.
right?
Uh-huh.
So that's kind of the cycle. And then you can picture, like, obviously we're not just working with $50,000, right?
Mhm.
You should never attempt this strategy if you only have one contract, enough capital to sell one contract. So
Right.
we have multiple different contracts at multiple different strikes. So
Right.
as the market fluctuates, we just close orders that are profitable and
Mhm.
we'll double down on ones that go against us. And we just keep ebb and flow with the market
Mhm.
and we just capture profit. If the trade goes against us, our only obligation is to either buy the stock at a lower price or sell the stock at a higher price, and both of which we're happy to do.
Mm. Gotcha. Now, so we talked about this, asked this question. This is something you guys do it yourself. It's not something like an AI trade or
No.
technical, I mean, some kind of computer trading, essentially, you guys do.
Yeah, I literally log in. I can log in on my phone or on the computer, whichever is convenient at the time. I have alerts set on my phone.
Mhm.
Trading, we don't day trade. A lot of people are like, "Oh, you're day trading." It's like, no, we're not day trading.
Mhm.
We're just waiting for profit,
Right.
right? That's all we're doing. Like, so if I place an order, like which I did today, I sold an option today.
Mhm.
I probably won't touch that thing for 2 weeks because I want to let the time decay it.
Right.
And one of our cardinal rules is that we'll never ever close a trade for a loss. So
Mhm.
no matter how bad the trade goes against us,
Mhm.
we're just going to keep it because at the time we were happy to buy the stock at that price
Mhm.
or sell it at that price, whichever the case might be.
Mhm.
So we'll just live with the underlying outcome because we were happy with it at the time. Why'd our mind change?
Right.
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 And if you close those trades, you're just losing cash,
Mhm.
right? You're just extinguishing cash from existence. And we don't want to do that.
Mhm. Gotcha. Now, we did go on this, but kind of share with the audience, I guess, what's the average return has been past however many years. I mean, you showed the chart, but we don't have to share the chart, but just to,
I can actually probably do you one better. I could share our NAV portal site with you and just show you what our returns have been instead of looking at the QQQ. So we haven't because the QQQ over the, since we started trading in March, the QQQ has just gone up like 60% or I can't remember the exact number, so I shouldn't say, but it's gone up a lot, right? So basically what we try to do is provide a cushion for volatility. So when the QQQ goes down by, say 10%, we're only going to be down by like 3 or 4%.
Hmm.
When it goes up, though, we take about 60% of the upside, but we only take about 30 to 40% of the downside, depending on how far it goes down.
Gotcha. Gotcha.
Does that make sense?
Yeah, gotcha.
Okay.
Okay.
Yeah. If you want, I can just share my screen here and show the growth of $1,000
Yeah,
since.
I guess we can do a quick share.
Yeah. Yep.
It might be hard to do detail, but yeah, quick
Yep.
one.
No, just a quick. This would be the growth of $1,000. So in February 2023, if you'd have put $1,000 in there, this
Mhm.
would have been the path of the money. So it would be worth 1257 now. So it's about a 25.7% return.
Awesome. Cool. Perfect.
Okay.
So, uh, I mean, anything else you wanted? Okay, perfect.
Oh,
So
you're good.
now here's my question, right? One of the questions. Obviously, what's, I mean, I was going to ask this question, but that question doesn't make sense because obviously you're hedging against the loss and doing so many things to make sure there's no losses. So obviously somebody's paying attention. No, the strategy has to do it, not like every lack of better word, Tom, Dick, and Harry can go just do it just because they know QQQ exists.
Yeah.
right? Yeah, there's a history of QQQ being profitable. Yeah, that doesn't mean anything because you kind of explained before for people not, obviously not in that conversation. What Chris did explain was it is volatile, pretty volatile in the sense, when S&P essentially goes up 1%, it could go 2-3% up, and then down percent it'll go more than that. So that's the
Yep.
volatility. That's where people and novice or somebody who doesn't know what's going on can do it. So in case like someone like me taught me like, oh, he told me what QQQ is, I'll just go do it myself,
Yep.
right? That's where the difference is, where somebody else is managing that for you.
Yep.
So all right, cool. That, with that being said, right? Um, now you kind of we didn't share this with the audience. So what is it people, you know, can do to if they wanted to invest or looking to invest, what are they required to do? The minimum.
Um, yeah, so requirements are that you're an accredited investor because we're a 506c fund. So we can advertise, which is why I can mention this on the podcast. Otherwise, I wouldn't be able to mention it on the podcast. So you have to be an accredited investor. If you don't know what that is, you have to be making $200,000 a year if you're a single household, 300,000 if you're a dual household, or have a net worth of $1 million or more. And so basically, you go through a process of getting approved with our third party administration. And I
Right.
think that's a huge deal to have a third party administrator rather than, in house accounting.
Mhm.
So you do this process with the third party administrator, and then you advance your funds.
Mhm.
You sign a document, a PPM and subscription document, and NAV approves all that stuff. And then you just sit back and you can watch it. You can log in. You'll have an account with us, and you can log into the account and see everything.
Gotcha. Well, one more thing before I have a couple of questions on your early career, because I had some interesting questions, but I kind of
Yeah.
kept it aside. So one of the things you kind of specifically mentioned is about the security of the essentially the cash that somebody's investing with you, how everything is transparent. Could you kind of explain that to the audience? I guess like somebody
Yeah.
wants to invest 50K, it's not like you're managing the money kind of deal. So,
Yeah. I mean, I am managing the money, but I couldn't just take your money and screw off to the Bahamas, right? And
right,
I think that's really important because there's so many scams going on right now, and so many people have been victimized by these scams. And I think it makes people hesitant to invest with anybody, right? I mean, it's just you have to be aware of these things.
right.
So the things we did to mitigate that kind of risk is no in-house accounting. We hire all of that out. NAV Consulting does all of our books. They do all of our investor statements. So when somebody puts money in, their money first goes into an account that would take 3 people to sign to remove the money.
Mhm.
And the money never gets really removed. It gets only transferred from that holding account into our trading account,
Mm,
which also we need a couple of people to sign in order to get money out.
mm,
So essentially, let's say you want to withdraw your money. That's where the problems come in, right? Is
mhm.
when you want your money back. There's never any problems when the money's going into the
Correct.
fund. It's only
Sure.
when the client wants their money back that there's some
Right.
problems, right? But the way that our fund is set up is that you have to send NAV a request that you want to withdraw some funds.
Mhm.
Then they contact us saying, "Hey, this customer wants to withdraw their funds." You can initiate it with us, and then we'll just tell you, email NAV.
Mhm.
And so then they call us and say, "Hey, this customer wants to withdraw the funds," and then they approve a transfer to our account so that we can wire it back to you.
Mm,
And
gotcha.
they will only do that if it's going from our account into the same account that was sent to us in.
Gotcha. Gotcha. Awesome.
So, if you send it from a company, we got to send it back to that company.
Gotcha. Okay.
And
So yeah, that something I wanted people to understand how the money management is done, so there's some confidence level. But either way, I'll be posting whatever Chris will give me, based on his website, company information. I'll be posting so you guys can check it out yourself if you're interested, and obviously set up time with Chris and
yep,
walk through and understand more of what he's doing, because historically what QQQ, I forgot we mentioned that it's about 40% return seems like average. If you average it out, obviously every year is not
Over the past 10 years, it's averaged 40%. Yeah.
40%. Yeah. So that's what we talked about before. So moving to back into your history, because this was very interesting. I didn't get into it because I wanted to get into first the
Yeah.
stock stuff before we got into that. So what fascinated me was like you said you bought this restaurant business and all, from nothing money to generate a 90,000. So give me the backstory. How did you know how to do that? What was that? How did you know how to do
That's
that? What would you...
that's the best part. I didn't really know. I just figured it out as I went. Like
Wow.
it was crazy, Raju. So
Mhm.
my dad was pretty funny. So he essentially was like he believed in me, and obviously he believed in me, and put some money up for this. But he was always like, "How are you going to get people into that building? Like, it's doing $400 a day in sales. Like, there's
Right,
no people are creatures of habit. You don't have any money for advertising. What are you doing?" Right?
right.
And just like I didn't think anything of printing off these takeout menus and just running around all these businesses. I
Mhm,
did it for like 3 weeks, right?
mhm,
I just like drove around and made conversation with people.
mhm.
And I didn't think anything of it. But looking back, in retrospect, if I was one of those business owners and some 21-year-old kid came into my business with a takeout menu saying they're taking over this restaurant that's been in town for 25 years that nobody really goes to,
Mhm.
I'm going to eat anyways. I'll go there and check it out.
Right.
Right. Like, and that's kind of the attitude that everybody took. And it never kind of clicked with me until a customer come in that was one of my very original customers, first or second day. And he
Mhm.
was like, "I remember you 5 years ago coming to my business and telling me who you are." He's like, "You had such charisma." He's like, "How could I not come in here and try it out? Like, I gotta eat anyways. I might as well just go in and see what this kid's got going on, right? What's the worst that could happen?"
Got you.
So,
Then, uh, go ahead. Sorry, finish it.
yeah, so kind of a lot of people just adopted that train of thought and just started coming. And then people are creatures of habit, right? If I get them going there, then they'll keep coming back as long as I make them happy.
Right.
So I did whatever it took to make people happy. The first weekend, we had people waiting 2.5 hours for their food because we were so overwhelmed. And we
Wow.
just kept feeding them booze, like free drinks until you get your food, right? But when the food came out, it
Mhm.
was spectacular. Like,
Nice.
part of the delay was like, oh, that's not good enough, right? I'm throwing that away. I have to make this first impression perfect. Obviously, 2.5 hours is not an ideal time to wait for your food, but
Right.
we're like, whatever, we understand, no big deal. And they're half hammered by the time they get their food. So it tastes even better.
Wow. Okay. That's actually there's a lot of excellent strategy there. One, over deliver. Second, give away something without expectation, giving away a lot of stuff like free booze that you're thinking more the long term, not the short term, and that kind of like, snowballed. So did you employ the same thing with the second one you bought in front? So kind of went with the same similar strategy, or you already
No.
had this whole brand already built?
Yeah, so with the second restaurant that I started 5 years later, so that would have been in 2009 when I took that over
Mm-hmm.
in May of 2009. It was a bit of a different story because it was a different restaurant. It was a breakfast restaurant. So, just to give you an idea of the difference between the two,
Mm-hmm.
in the steakhouse that I had, the original one, we'd sell about 3,000 to 3,500 plates of food a month.
Mm-hmm.
In the breakfast restaurant, it
Mm-hmm.
did slightly more sales than the steakhouse did, but
Mm-hmm.
we would sell 10,000 plates of food a month.
Wow. Okay.
So triple the work
Mm.
for the same sales and thinner margins
Margins, yeah.
because nobody wants to pay more than $5 for breakfast. I mean, you got to keep in mind this is 10 years ago, right?
Right,
So you got to keep in mind that. But nobody at the time wanted to pay more than $6.99 for a breakfast, really, right?
right, right.
So the margins are razor thin, and the problem wasn't that there was no one in the building. So the first restaurant, the problem was nobody was going there.
Going there, yeah.
The second restaurant, the problem wasn't that no one was going there. The parking lot was packed. It's full all the time. The
Mhm.
problem was they had 17 staff on at a time,
Oh.
and you need about seven.
Oh.
So you're spending an extra few $100s an hour
Mm.
on staff when you don't need it. It's just people are lazy, and the business owner did not ever want to go into the building. She just wanted to keep throwing staff at it.
Ah.
And if you know anything about HR, throwing staff at a problem is usually only going to get all the staff talking about the problem. And that problem is usually the boss, right? So I went in there and I just got rid of people. I don't want to say like got rid of people, but I was basically like, I can't afford to keep everybody.
Right.
So if you guys don't want to be here
Mm.
and you show me that, you're not going to be here.
Mm.
So I'm only keeping people that want to be here. If you want to be here, show me that and you're safe.
Mhm.
But, people show you who they are very quickly,
Right. Quickly, yeah.
right?
Mhm.
With their work ethic. So it was very easy to trim out the staff in the first couple of weeks. And I
Mhm.
actually was able to start working at that restaurant before I took possession of it. So that was very convenient.
So you knew people already. Yeah.
Yeah. So
Gotcha.
I worked there for 4 weeks before I took it over.
Gotcha.
Once the deal was finalized, they let me work in there. And so I was able to see everything that was going on and who was doing what, but I
Mhm.
wasn't technically their boss yet, right? So
Right.
they could still treat me however they wanted.
Right.
They knew full well I was taken over May 1st of 2009. So
Gotcha. Gotcha. That's
yeah.
a great strategy. All right. Awesome. I mean, that itself could have been a fascinating. I could go into more, but getting back into our conversation. So for everybody, again, let's kind of remind everybody what Chris now is doing. Obviously, he's not in the
Abundance
real
asset
estate
management.
restaurant
Yeah.
business. Now he's totally focused on the, stock trading, stock cash
Stock
flow
options.
trading, even
Yep.
essentially. So where your stock option or stocks are getting you cash flow, that's his concentration. That's the key, because if you're a real estate investor, if you're in real estate, that would be I would say, attraction. If you look at cash flow,
Yep.
I believe that should be most people's concentration, unless you are, I guess, I don't know, Warren Buffett, and then you don't care. No,
Yeah.
Warren Buffett is also cash flow, right? Everybody,
Yeah.
most people are cash flow. So anyway, so if you're looking for that, then probably you ought to take a look, check out Chris's strategy and what's he doing, and then maybe if you want to invest there, and I'll be posting the links. So now let's get into the last three questions, Chris.
Yeah, for sure.
So what's the best book or your favorite book you have read, other than the religious, right? Bible, whatever. We were, if you're religious, obviously that would be the favorite.
Yep. Yep.
Or that, like a business or personal development, whatever, right?
Yep.
You
I would
for
say
the
Tony Robbins' Money Masters.
Money Master. Okay, Master. Okay, perfect. Yep.
Either Money Mastery. I can't remember exactly what it's called. I think
Money
Money Master.
Master the Game, I believe. I do have the book. Money
Yeah.
Master the Game, I think. Yeah.
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 That's a great book. Yeah. It's a freaking extensive book. Yeah.
I
That's
actually used it to form some of my thesis for abundance asset management as well.
awesome.
Because in there, he talks a lot about mutual funds. And Phil Town also talks a lot about mutual funds.
Got
And if you've read Phil Town's book, he refers to mutual funds as the garbage truck of investing.
Gotcha. Yeah, I don't remember what he said there, but I read the book. So yeah, no, awesome. That's a great book to read.
Yeah.
But anyway, Tony Robbins' book. Awesome. Well, obviously, since you're in this world now, you started about a year and a half ago now, right? Somewhere around
Yep.
that year and a
Yep.
half ago. So what inspires you to get up and do what you do every day now? So
I like helping people. It took me so long to figure out this path. And I can save people boatloads of time and money with our strategy. Like, I cannot tell you, if I knew what I knew today, it's the same old story, right?
right,
If I knew then what I knew today, oh my God, it would be a drastically different situation that I'd be in, right?
right,
But you got to do so also in a risk averse way because we don't know what the future brings, right?
right.
So I think that we walk a pretty good line with that with abundance asset management.
Cool. Awesome. Well, then the last one is one tip, one tip that you've, I guess, recently learned, or one of the biggest tips you have for
Yep.
people, either personal, professional. What's the one tip you can share?
I think professionally, I would say, like, as far as the investing goes, people always say, "Oh, this is not investing advice," but nobody's paying for this. So, I can say investment advice as long as nobody's sending me money for it. So don't send me any money for investment advice. But just invest in the S&P 500. You don't have to overcomplicate things. You don't have to pick stocks. You don't have to try to renovate real estate or come up with the huge sums of money that it takes to buy a house and flip it, things like that, right? You don't have to put in all that work. If you invest in the S&P 500, just to start with that, you'll outperform 90% of professionals out there.
Right.
And, to know nothing about investing and just buy the S&P 500, you're setting yourself in the top 10 percentile of investments. So,
Got you. Kind of do the dollar costing average and just
yep,
continues, which is something I'm planning to do myself. And because I kind of avoid stock market, I've kind of burned myself a little bit, so I kind
yep,
of invest in things I can rely on. But that's a great strat. That's more I look into it, that's the easiest way to do it instead of worrying about all the other,
yep. You
factors.
can just
Awesome.
block out the noise that way.
There you go. Perfect. Great tip. Chris, all right. Thanks again for taking the time, Chris. Again, I'll be posting his links, information. So if you guys want to reach out to Chris and see if what he's doing is something you would like to do with him now or in the future, right? It's a conversation. Chris is in no hurry to get you in, right? He'll just have a conversation and share
Yep,
with you. If it's a fit, fine. If it's not, maybe in the future or whatever the
yeah.
case, right?
We're just here to build relationships, so don't be afraid.
Exactly. And it's an information, right? This is an information out there. This is an option for you. If it fits you right now or in the future, there's something like this. So anyway,
Yep.
again, Chris, thanks for taking the time, man.
No problem. Thanks for having me, Roger.